Hello and welcome. Monday, we're back here, Monday Market 15-minute show that takes about 30 minutes, well over the 2 o'clock hour. So if you tuned in at 2 o'clock, we run late, what are you going to do? And amongst other things, we bring you value here. But with me, as always, my co-host, the wonderful, the beautiful, the most person in roses today. So Miss Ashley Perkins.
Hello, everyone.
Yeah, she's back in action. She's here. But we do have a special guest today. Miss, do you want to announce who that is?
So this is Matt, and Matt and I have been friends for, I don't even know how long, and we've been working together. Yeah. I'm in title, and he is in mortgage lending for quite some time. And
Since
I can't believe
2007.
I can't believe we haven't had you on here yet. But I'm super excited. Matt just joined a new company, so I'm going to let him introduce himself and tell about where you are right now.
Go for it, Matt.
Yeah, hi, I'm Matt Maracek. I'm with Cross Country Mortgage. I have been doing loans since 2007. Like I said, it seems like it's gone so quick, but there's been a lot of ups and downs in our industry, and I started at the absolute worst time, and now everything's kind of progressed, and here I am, happy to be on the show with you.
Well, I think starting at a bad time in the industry, like when I started back in the day doing mortgages in 2000, well, it was actually 6, 7, and 8, 9, all the way up to 2010, man, it was very humbling. But now the market doesn't seem that half bad.
Yeah, right?
Yeah, I mean, is this like echoes of that time period? I mean, I got into real estate roughly about 2014, so kind of on the recovery piece of that. And I've seen nothing but great things, and now we're kind of heading back into that, at least from my.
It was definitely interesting starting off, because you're seeing everybody make so much money and so quick, and like when you jump into it, you're like, oh, if these guys can do it, I can do it, right?
Yeah.
And then literally, I was 1 month into starting with, the company I started with, back in 2007, and then everything just went imploded. Mm-hmm. And then I think I went through about 5 different banks because every bank I went to continued to implode. So, I established some good banking along the way, and, I've made some mistakes, here and there, but, the knowledge that I picked up throughout the years have definitely been something that I cherish, and I help with a lot with my current clients and whatnot.
Yeah. So the bank you're at right now, Cross
Country.
I am tongue-tied today. What made you go there? Because there are these big banks, and a lot of people have a tendency to move towards a credit union or their bank that they've banked with for a long time, and then they hear you, and they don't know you and your company. What makes your company, and you just, well, I know why you're so awesome, but like, what makes your company so awesome? Why did you choose that company?
Well, sure. I've had a lot of opportunities, and a lot of other places reach out and try to recruit me. And, the thing with Cross Country Mortgage is they really have expanded their portfolio products and their niche and niche-y products where they had to get really creative, especially in times like we're in right now. So having the ability to basically lend to, others out there, self-employed borrowers, sub 620 FICO scores, products outside Fannie Mae, Freddie Mac, Ginnie Mae. So having the ability to basically create products for, these borrowers that just can't get traditional financing from their current banks, big banks, credit unions, things like that. So it kind of gives me an upper hand. And not to mention I have a processor that I've known for 11 years, and she is the best. So having all that knowledge, and you can really, help ease the pain with the buyers going through the process. And
that creative environment has been pretty existent for the last year, because I swear to God, like a year ago around this time, we're getting creative on like, how do we just get an offer? Because there was just so few listings, things would be on market, like a day, 2 days. And then, like there was a whole period of a couple months there where we were thinking like, how do we make cash offers on the back end, do the loan, and then make the cash offer so it could be just ahead of the competition? Because I remember there was a point where you're just looking at cash offers. You weren't even like looking at loans of any type, right?
Sure.
And now we're facing another issue, but it's similar as far as the competition goes.
Absolutely. And then a lot of these agents that sometimes too were putting in cash offers, and the clients had to do a cash offer in order to just get into the ball game, and then we have to do a loan in 10 business days, which theoretically we can get done.
Yeah.
So, a lot of the sellers, aren't real keen on that, but they're like, they gave us a little bit of leeway, but having the ability to put that cash offer in was almost the only way to get your foot in the door.
Well, it's so interesting, like putting in a cash offer and then doing a loan within 10 days. But a lot of people, again, I'm going to echo myself from before, are going to their credit unions and their big banks. Like, you guys have an opportunity with what you said to think basically outside the box, but yet still conservative, I'm assuming?
Absolutely. Yeah. I mean, having everything in the ability to do everything in-house, processing, underwriting, fund the transaction, having that control over the whole entire, piece of the puzzle throughout the transaction really, can improve your willingness to get the loan done quick.
People I think would be a little bit scared of like this, what they called back in 2007 creative financing, but this is not creative financing, because you gave me an example about a couple, if you want to share that with all of us.
Sure. Yeah. This couple came to me and, I was telling them how I was going to structure the loan, and they were talking to their current bank, and their current bank thought I was doing something shady. And, this particular couple was over the retirement age of 59 and a half. Yeah. So on paper, they only had Social Security income and pension coming in. So their debt to income ratio looked like it was like 65, 70% on the back end, but they had enough money in their IRA account to set up a distribution, and you can actually use that as income to qualify them. So that's what I did. And they went back to the credit union, and the credit union loan officer was like, no, something's shady. And I straight up told her over and over, I was like, listen, this is 100% legit. I've done this over and over many a times. So, there's just a lot more, things that I feel like I can work with at Cross Country Mortgage than, a lot of these other banks and credit unions can't do.
So cross country means you are
across the country.
The country.
Yeah, we can lend in every single state.
So how does that work with, for example, like Robert's an agent and I'm in title and you're in mortgage. So we, this is like your core group when you're purchasing a home.
Correct.
These are your main people that will make this transaction happen. But when you're dealing with an agent that's out of state, to me, I would panic. That would make me freak out.
Certainly. I mean, communication up front, that's where it really starts, establishing that relationship, letting them know that, hey, I will walk this through all the way from start to finish. You can call me, you can text me, you can email me, and you will get a response. And the beauty of Cross Country Mortgage is throughout the process, we have automatic emails, so the agents themselves will know when that appraisal is ordered, when it goes into processing, when it goes into underwriting, when we have approval. So everybody throughout the entire transaction knows exactly the same time. I know where we're at. So
do they sign or not sign, but would they deal with anybody else within your company in another state, or you and your team are solely the ones that take care of it?
We're just my team right here in Arizona.
Yeah.
So how long have you been in business now, Matt?
Since 2007.
So that's roughly what, 15 years or so?
15 years.
You're getting old.
Yeah, and I think you reach an epiphany or a point in your career. It was about year 5 for me where I'm looking back. I'm like, oh man, I really have a business now. It's like, it's not so hard making cold calls and not so hard like picking up business, because it's kind of coming in at this point. Was that around the same time you had your kind of like?
Yeah, I remember thinking back when I first started getting going, I was like, gosh, I can't wait for 4 years. Give me past year 4. For me, it was 4. I don't know why. But, then I kind of established a name for myself as kind of like the Magic Man. I got a bunch of agents that call me the Magic Man, because there's a lot of borrowers out there that,
Ashley's writing that down.
Yeah, they have a lot of issues with their credit, and, a lot of loan officers just don't either know how to restructure the transaction or just don't want to work with them. And so, I've always gone above and beyond for any client out there. It doesn't matter if you got a 500 FICO score. You have to start somewhere to know where you can get pre-qualified at. So.
Well, that's what I love about you, is because you are very honest. Sometimes to a fault, I'm just going to say, but you have no problem standing your ground and telling somebody exactly like it is. And that's what we need out there is honesty. Because when somebody comes to you and they're in a situation like, oh, I can get it done, you're like, no, I can't unless you do X, Y, and Z. And you brought up credit. So I know you'd mentioned Cross Country has a program.
Absolutely. Yeah, there's a lot of companies out there that kind of have the same thing, but it's basically a credit simulator. Mm-hmm. When you're pulling credit, it'll simulate what your potential scores will be if you either, establish new credit, pay down existing credit. Collections are a big thing out there right now, where a lot of clients think they need to pay off collections, and especially if it's medical debt and you try to go pay off that medical debt, your credit score goes down. Yep. So it's always good to have that credit pulled and then reanalyze it and to see where you need to go, because a lot of people will call me like, well, I need to pay off this and this. I go, well, how do you know you need to do that? You don't know what your credit score is, because they're on Credit Karma, and then I pull the credit and it's like 50 points higher than what Credit Karma says. So, yeah, you just got to pull it and then kind of go through the process.
Well, I think it's all too often, I'm sure Robert can contest to this, that we go online for information. Constantly. They're going on Credit Karma. They're going to all these different places like pay off your debt, do this, do that. And it's terrible information. Just like interest rates. When you go online, people think that they're going to get this low I say 7% is low. But some people are getting higher than 7%, right? Yep. And some people, are they getting lower? I don't know.
Well, information highway is the worst on the internet with interest rates, because if you're not reading the fine print, and you just don't know what you're getting, because they could advertise a 6% interest rate with 3 points, and the people are like, oh, this bank's offering this, and then all of a sudden it's costing them $20,000 just to get that interest rate, and they don't even know. So
I would say check your source. I mean, it's hard to really, because I think a lot of people are intimidated to talk to anybody, especially housing, because I think if you're looking at buying any product, it doesn't even matter if it's real estate, you worry about that phone call, that one email you send out, you'll get like 50 people calling you. It's like, it's very intimidating, especially a bigger purchase like a house, and your information and where you get it from, it varies. And I'll bring up, I'm leading to a thing. So that's
we got you.
So, so I'm over here at Mortgage Rates Daily. This is one I usually pull up, for me and for my stuff. And I look at the 30-year fixed here, and it's 7.29%. But then if you go to like a Google search on mortgage rates, I mean, it's 8.228. And it's like, well, how can you get and formulate a good decision when something like, even, I guess, credibility-wise, Google is probably fairly credible. I don't know. And Mortgage Rates Daily has a good reputation for that. But they vary almost a full point between the just two websites.
Yeah.
And so before I make that call, that I'm very intimidated, and this is prior to doing real estate. I'd be a very intimidated person just to reach out and start that conversation and just go to these places. And so I guess at the end of the day, it's like, check, trust who your source is.
Sure, absolutely. I mean, read the fine print.
Because you were saying that people can, throw in stuff like that. They can quote a very low rate, but then you have to buy down points.
These first time home buyers can be very confusing, because like when you're buying down the interest rate and somebody sends you like a good faith estimate, it says discount points, right? Like, so these first time home buyers are thinking, wait, I'm getting a discount, but they're actually being charged, a percentage point or 2 points just to get that interest rate, which I don't like the wording on the whole discount point thing, just because I've gotten that question many times, but you just gotta cross your T's, dot your I's.
Do you guys still have first-time home buyer programs?
Oh yeah, absolutely.
So tell me about it, because when I purchased my home, I did that program, and I actually got money back. I don't even know if that's possible anymore, but I got like a $976 check back after
that's nice.
All of a sudden. It was pretty badass. I'm not gonna freaking lie. I don't even know if that exists anymore.
So down payment assistant. Mm-hmm. Yeah, so there's a lot of different down payment assistance programs out there. There's 2 or 3 of them, but they all carry a little bit higher interest rate. But that's how they give you that money, for
so I think I paid
program.
4% during a time. It was at like 3 I don't know, somewhere in that range. But eventually I figured out, and now I only have like a 2.5, which I'm not touching it because
I wouldn't either.
Like there's nothing to do. Because we talk a lot about what our first house, like our interest rate on our first houses we're higher than the interest rates that are right now.
Absolutely.
But our economy is freaking out.
Yeah.
So like, what's your opinion on it? Should we be freaking out?
Well, yeah, because my rate was like 8% when I first bought, but also the price of my house was like $130,000. So it was like
they're a little bit higher.
So it's a little bit higher now. The prices anyway. So I'm sorry, I didn't mean to cut you off, Matt.
Yeah, there's Barry Habib is one guy that I follow quite a bit. He's an economic guru. He's kind of like the Luke Skywalker of mortgages.
We like that analogy.
Oh, Barry, I think it's Harry.
Yeah,
Habib.
Barry Habib. But I follow him, and MBS Highways is kind of where he posts all his information at, and he kind of thinks you got to follow inflation. and when inflation gets to an all-time high, where else is it going to go? It has to come back down, right? So when the inflation comes back down, you're going to start seeing the rates come back down. And, we have a chart that, that'll go back. What's that chart say? It goes back to 1970.
Oh, I'm pulling up the chart. Let me pull up the chart.
So you can kind of follow the trends, where recession is in the darker blue, navy blue area. And, when it peaks, it slides right back down pretty drastically.
I think it's hilarious that 1980 and 1982 was the year you were born, the year I was born. It was at the highest. And then there's a huge gap, and another huge gap, and another huge gap, and another huge gap.
Yeah, so,
what was happening?
So when these buyers are, freaking out about 7%, I kind of just say, hey, let me email you a couple of things and some slides to show you, like, historically, we're still at, rock bottom rates for the most part.
And this kind of highlights kind of that cycle, right? That recessionary cycle
7 to 10 years.
we have, and roughly, I mean, all of it's like 10-year gaps in between.
Yeah.
I mean, the 7-year one is probably between 2002
But that's what they say, 7 to 10 years, we're going to have ebbs and flows. So
and we're well overdue. We're well overdue for another recession, right? Is there a recession now? Do you think
Yeah, I mean, they have to. I mean, my prediction is next March, April of next year, we're going to start seeing things slide way back down. And, the 2 quarters that we've had in a row, they follow the GDP and, and everything points to us being in a recession. I mean, I was at the grocery store the other day and paid $8.
Dude, I just went
for a dozen eggs.
I just went grocery shopping. Shit you not. For my family, $900 for one grocery ship. One grocery. Well, think about it. I mean, of how many boys we have in the house, and I am a couponer.
Yeah.
I say so. With it being, it was actually like $8.58 or something, and then that my savings was $150 with couponing. I about shit myself, and I forgot the freaking eggs. A, because they were mostly out of them, and B, I'm not paying $5 a carton when I used to pay like 89 cents. My kids, I'm about to go buy a freaking chicken.
It's Louis Vuitton chicken
at this part. Like, it's seriously, like, it's absolutely insane. So I tell my kids, you can't buy it unless it's on sale.
Right.
Unless it's a tag.
And since we're talking about recession, is there a kind of, not that we give financial advice on the channel, but
we are not financial advisors.
I had a conversation actually this morning with a client of mine. I'm like, the best place you can be right now is holding cash, paying down debt, and waiting for the next opportunity to come, because right now everything's just so overinflated, expensive. And my landscaper actually reached out to me today too. He's like, hey, work's been slow because people can't afford to pay for their landscaping right now. So I'm starting to see that the recessionary kind of outcome fall into the markets and everything else that we're doing. And so, I think being cash heavy, if you can, buy down your debts is something that, pay down your debts is something I think you should do right now, and then wait for the opportunity. Sure. And if you have to buy a house, I mean, hey, you have to buy a house. You just look at the scenario and make it a good decision based on the circumstances.
Well, and both of you guys can give me your opinion on this. So interest rates are high, right?
Yep.
It's still a great time to buy a house.
It is high.
It's high for what we're used to. And I believe it's still a great time to buy a house because we watch the chart, 7 to 10 years. If you plan on staying in your house, there's an opportunity. Rates are going to go down and you can refinance or.
Absolutely.
I mean,
man, if it's a dream house, then yeah. But I'll let Matt.
Well, my take on this is like, if the media is negative, and then you got everybody else in the industry trying to be negative, right? And everybody's complaining while they're slow because the rates are high. Well, if everybody's sitting on the sidelines waiting for the rates to come back down, what's going to happen to you trying to buy that dream house? Now you're competing against the other buyers that want that same dream house, and investors that have cash that are stockpiling their cash for the rates to come back down. So my thing is like, you need to buy now. You need to negotiate now. If a seller has a home on the market, there's a reason why they need to sell. Either a job transfer, relocation of whatever, they want to upgrade, downgrade, whatnot. I mean, now's the time to buy and negotiate with these sellers, because if they have it on the market, there's a reason they're selling the property.
Yeah, and for me, based on like we did some charting, not too long ago, and I believe there's going to be about a 25%, regression back to the 2019 kind of trend line, and so whatever house is on market right now, take about 25% off, and that's your offer. And that's just generally speaking. Again, not a financial advice, but whatever the price is in the house, especially if it's been on market for 60, 90, 100 days, why not? I had another conversation last week. I'm like, hey, just offer 100,000 less. See where they're at.
It's like spaghetti against the wall.
right?
Like,
You know, I mean, what are you going to lose? They're going to say no, and then you're going to be like, okay.
I mean, I just closed a transaction for a listing agent, and literally the property started at 1-1, and they ended up closing at 825.
Oh, I believe it. 100% believe it.
There are some people you're selling for a reason, and after a while, it's like I need to sell this. I need to kind of offload it somehow.
Yeah, and if they say they don't need to sell it, well, then take it off
And
the
then
market.
exactly. Exactly. Well, I'm curious though to know, because you work in 50 states. It's kind of a random question, but where do you find the market easier to do transactions in, if there is a place?
Is there easier?
You know, I mean, every transaction for me is the same, really, except for there might be some differences in things such as taxes, and you know, like California is a state that has Belarus and additional tax rates and things like that for schools and whatever else not. But across the board, it's pretty much, you know, hey, send me the loan, we run it through Fannie Mae, Freddie Mac, and if it's outside the norms, you know, over $715,000, doing a jumbo loan here in Arizona. So you really just got to kind of look and see what the guidelines are for each state. I mean, you're going to have some differences of, you know, jumbo loan guidelines in those loan amounts, and Fannie Mae and Freddie Mac, you know, loan amounts there too. So that's kind of really the main things. Or, you know, right now, like the hurricanes, hazard, like, you know, places in Florida where we just won't lend in because of.
Oh, gotcha. Okay.
Because of the hurricane.
But you said Freddie Mac, Fannie Mae, and I'm assuming Ginnie Mae. Like, but you have more products outside of that.
Yeah, 120 to be exact.
Which is.
He's got some big guns there.
Well, you know, the owners of Cross Country Mortgage have always said that, you know, it's like, look, we're always going to be one step ahead of our competition. And, you know, they came out with a 5% down construction loan the other day that I was just on a conference call about, and which is really, really impressive. Is
that residential or is that commercial?
Residential.
Okay.
Yeah, we don't do any commercial transactions, so anything up to 1 to 4 properties, residential is, you know, we'll lend on.
So 5%. Sorry, I'm intrigued now. 5% construction loan. I want to hear about this because I do work with a lot of investors. So like 5% construction loan, they do draws.
Correct. Yep. Up to 8.
8 draws.
Yeah.
That's actually pretty impressive because most places only do 4.
And you have to start the product with us. Like if you already started like your foundation, we're not even going to touch it, you know. So a lot of times I'll get people to call me and be like, oh shoot, I ran out of money, I need a construction loan, and like, but the foundation's already poured. Sorry, you know, we
just went through that. That's when I text message you about that, because that's something that we were going through, and they're like, oh, we need to refi and take out cash out of the property for the potential of what it was going to sell for. Wasn't an option, and like, shit, we ran out of our construction money. So now what?
Yeah.
And so you have to start. But the fact that you guys do 8 draws, that's actually, in my opinion, helpful, because 4 draws, you're trying to predict how much you need on each one. But 8, you can work at a more steady pace.
Sure. I mean, I think the permits are down a little bit, but, you know, I think, you know, as soon as the lumber prices start coming down a little bit more, they already came down a little bit. So I think you're going to start finding people kind of go that route of building their homes again.
Are you guys adjusting your construction loans based upon product prices or no?
No, not necessarily.
No. Okay. Just curious. I was hoping for a yes.
Yeah.
So how do you do your evaluations? I mean, you just do a pre-appraisal? It's very
this is very intriguing to me.
Yeah, like, you know, the architectural plans and assessments of that. Yeah, I mean, you know, you send those in, and, you know, we'll base value off of the prints. And well, I mean, you got, you know, if it's just the only house in the area, I mean, it might be a little bit tough to appraise, but I mean, you still are appraising, you know, within that one square mile radius if you can.
Are you guys doing any loans? Like, for example, this just came up for me the other day, where it's an awesome horse property, and it's in a random. There's only like 5 or 6 properties in this area. They're horse property. It could be deconstructed, and you could actually subdivide it into 3 different. It's one parcel, but you could subdivide it into 3 different. How would that even, is that considered a construction loan?
Well,
I know that's kind of a tricky one.
Build on it, but I mean, you got to get the permits first, right? You know.
Yeah, and the city sucks out here right now.
Yeah.
So there's that. We won't talk about that.
But I mean, you know, a lot. You know, the thing lately is just, you know, I haven't really done a lot of construction loans, but my predominant. I guess most of my buyers right now are in the jumbo market, you know, over 715,000. Yeah, right. So that's where a lot of my financing is kind of mindset is just because, all the prices are extremely high.
What about land loans?
We don't do land loans.
So they would have to do a loan on the land, and then you guys would do the construction loan on top. But do you work with people who do the land loans? Like,
I don't even know of a bank right now that does. I know there are.
I know
banks
there's
here
not many
locally
but
that will do them. But yeah, typically, the cash. You have to buy that in cash.
Yeah, because you get a lot
HELOC.
of, like, especially last year, you get a lot of these buyers that were anxious and like, I can't find anything. I'm just gonna buy a land and then I'm gonna build my house on there. But there's other
yeah.
things you have to go
Yeah,
through.
yeah.
And then there's that. So now you have this piece of land with nothing on it.
Well, once you start reaching into the complexity of that situation, they kind of just drop it. And
Yeah.
I'll wait for the housing crash.
Or you can always buy the land and put a modular on it.
Right, exactly. I mean, you could
that's
put a
becoming
boxable
really-
if you wanted to.
Put an igloo on there.
So you put anything you
I'm,
want.
I'm starting to get a lot of double wide calls about like, hey, I want to buy this. And
You got four
You
minutes,
guys do
by the way.
manufacturers?
yes, we do.
See, there's so many things you guys do that a lot of companies don't do, and I think that it's what's the word I'm looking for? I don't want to say
We're not restricted. How about
you're
that?
not. Yeah, you're not. That's kind of what I'm like. You're not
It's
restricted.
rough
That's pretty
being in
much a
Ashley's
program
heads.
that will
I know,
fit
sometimes my head is
anybody's
like,
needs.
It's a crazy place in that.
It is a crazy place in here. But I think that's super awesome. I have so many freaking a million more questions. But
Well, we have about 3 minutes.
I know. Because I would just keep
the
talking.
million questions in about 2. What's the most prominent one right now as we wrap up? Everybody here.
So your personal, you outside of Cross, like what is your niche that you love doing the most?
In my business or just
Yeah.
outside of business?
No, in your business. No, not outside of business.
What makes Matt mad, I guess, is really the...
Maybe my personality, I'm a people person. I like to, wine, dine, and I
Don't
like
even
to.
say it.
Well, I like to work with the agents that want to work outside of work.
Yes.
So I like to golf a lot. So it's like, hey, you want to go play a quick
You still have
18?
not taken me golfing.
I guess we'll have to change that.
And we named the show after your best.
Well, no, because one time
best
I'm like,
club.
let's go golfing. He's like, I don't think I could handle golfing with you. And I'm like, I'm not a bad golfer.
Yeah.
Top
golf.
And I have nice. Oh,
Yeah, there's
gee.
always Top Golf.
No, I mean,
that's
the reason for that is I just feel like, to be in this market, you have to have a good, solid team, and it could be a different team, but it's, your agent, your title people, your insurance agents.
It's like a foursome.
Yeah, exactly.
Well, that's what golf is. It's a foursome. You have your four main
Yeah.
people, and those are the four main
But
people I think you need.
We're all working towards one common goal, right? And closing that transaction, making sure it's really extremely smooth and nobody's stressed out, because the buyers are always going to be stressed out no matter what, even if it's smooth or not. I mean, they got to plan the moves and things of that sort. But yeah, if you can have a good solid team and be out and have a good relationship outside of the work, then I think that's going to be the most positive thing, for being a great loan officer.
No, I agree.
Yeah, and you have to have a personality, and you have to really distinguish yourself from everybody else, because I mean, my God, there's like 10,000 other agents out there, and there's I think the last time I checked it was like 4,000 loan officers, something like that. And there's only like 1% that are doing most of the transactions. So you really have to put yourself aside and put yourself out there.
Absolutely. And you got to take on the hard deals. I mean, I think the hard deals have got me more business just because I am willing to put in that extra effort.
Yeah, you're patient for sure.
So with that said,
Well, we got to put your information in here so people can call you with their hard deals.
absolutely. So, Matt, I am not going to even attempt your last name again, but
Maracek.
I live with a Polish person, but she does.
She's your wife, by the way.
Yeah, she is.
Yeah.
And she likes to I like I said, I'm very intimidated by the number of Z's in anybody's name. My wife has 2, but you have 1. And last name again, sir? Maracek. But you go by Mo.
Yep.
Mo Mortgage. And so
Mo money.
head over to crosscountrymortgage.com for more information about cross country products and services. I guess I can get my face out of there, and then you can kind of see more of the website. Get Ashley out of there.
Get me out of there.
You had and then if you're on Facebook right now, you can go catch a little bit of Matt on his Facebook page. Matt.
You need to change that.
Oh yeah, what's
You
that up
need
there?
me.
Let's
You need me in your life.
let's hide
Yeah.
that. Let me put Ashley's face over that. Mo right here, and he's got 2,000 friends, more than I got.
That's all right. We'll get some more after this.
And then your phone number, contact information. Do you want to
Yeah,
reach
my
out?
phone number is 602-402-6524. And you can always email me at mattm@ccm.com. Pretty simple email address.
I guess we can add that to the.
It's a good thing I didn't use my last name in my email.
Yeah.
That'd be hard to
But I
spell.
will tell you, I've worked with you for a long time, and I always, just because the way I think, I'm always like MOR because people call you Mo, so
Yeah.
automatically MO. But then I have to remind myself that even though I'm dyslexic, I need to like dyslexic my dyslexia to spell your name.
Or just write it backwards or something.
Or just call me Mo.
Anything else, Ms. Perkins, before we head out today?
No, I think I'm good. I'm excited. I have so many more questions to ask you, and I cannot wait to have you back on.
Maybe we can
I'm so
revite.
excited.
Yeah,
Yes.
we'll do it
It'd be
again.
Amazing.
Until next time, Money Market 15, Robert Morales, RC Network, with Ashley Perkins, and then Matt
Maracek.
Coming at you live here every Monday. Money Market 15. We'll catch you guys
We'll see you guys.
next week.
Bye.